We've covered this trading pattern in the course a few times. It's called a measured move. I wanted to show you how symmetrical the market is sometimes. We have to more or less disregard the indicators here, but take a look. And we've had a high. We've had a drop down of a certain price, a small retracement to the moving average. Another, what's called a measured move, all right, which is basically the same distance in time as the other one, a retracement back to the moving average, and another part of that measured move. So there's 1, 2, 3. Now when we do get down here to these indicators, we do get a pretty substantial divergence. And where is the likely target? Well, it is anywhere from the 49 moving average to the 89 moving average, which will cross the midpoint of the first support here. So sometimes you can find these. When I saw this one, I took a short right here and got down to this level. You will also see that the Pesavento bars, the minor little lines, form a nice channel. So the next channel says we should go up here and then back down to about 1162. And this channel from 67 to 70 is 3 points wide, and this is perfectly tradable. Now, if you're just getting started, the thing I would do is wait for the next Pesavento bar down and then take a short. So I'm going to put this on hold for a second and see what happens. Now, since we last chatted, we were down here at the bottom. You see how we bounced back up, and now the market is starting to stop its downward slide a little bit. It almost broke through the 49, and it's down here now, and we're looking at a pretty substantial divergence here. So this would not be a bad idea to keep your eye on it. Now, overall, the market itself is down a little bit, about 30 points. The Dow is, and the S&P's down about 6.5. But again, I would pretty much bet, I think I'm going to take this trade. Unfortunately, it's just right after lunch. I'm going to wait one more cycle for it to go back up here to the 89 and make a higher low, at which point that would be a good long. So I'm going to put this on hold again, and we'll see where that projection went. Well, good thing I elected to wait. I went down and tested the low here. Looked like it was going to bounce up, but it is continuing this long-term channel down here. So again, we're on this bounce back to either 68, that would be the first resistance. You see we're bouncing off a low over here. There's another low at the 49, and then this high would be a little bit above the 89 moving average, about 68.50. So keep our eye on it. That divergence didn't work. They don't always do. But this will give you an idea of how to trade a slow market. Here is that bigger bounce. You can see this little false pullback right here occurred. You might have gotten stopped out, only it was about a point. Now you've still got the divergence here with the indicator. Higher high on the indicator, lower high on the price. And this little run up was from 1164.50 to 1166, which is what we have predicted so far. We'll see how much it goes. Typically the price will go up approximately to the midpoint of the first support and bounce down again off of one of these moving averages. I'm out of time on this video, but what's basically happening is the price is bouncing off the 49 here, and on the 333 it's bouncing off the 49 moving average and the 89 as well. So I hope this helped. Speak with you soon.